Hello and welcome to another update video about ADA. ADA pushing higher now in the target area that is basically showing the relevant parameters for the yellow wave count. Let's first of all maybe start on the 4-hour chart just to get everybody on the same page, and then we dive deep into the microstructure. And we're dealing still with a situation in which we have here a 5-wave pattern possibly developing. We only currently see 3 waves to the upside into the December high, then possibly wave 4 bottomed in January. This is precisely what we're currently investigating, and the analysis tells us which parameters need to be respected or which patterns we need to see so we can, let's say, believe that. And yeah, from here we are watching for one more upside wave in wave 5, targeting, from what we can see now, the area around 84 cents to 96 cents. This is still possibly subject to change depending on certain extensions that could be forming and so on. I would like to see a 5-wave pattern to the upside, an initial 5-wave pattern to the upside to suggest that wave 4 has bottomed. Before we see that, it is impossible to determine that wave 4 has bottomed. It would just be a guess. So I have to show you at the moment both scenarios and have to highlight that probabilities are still fairly balanced between one more low or the low already happened. But to be honest, they are both part of the same scenario. And it's literally just all about, okay, do we get another, let's say another chance maybe to accumulate, another dip into support, or is the low already in? But in both scenarios, yeah, in both of these subwave structures, in both pathways or roadmaps, I would be watching for, I'm expecting another high in wave 5, all right? There are certain conditions, of course, that need to be respected. But as I said before, as long as we're holding this yellow support zone, the overall parameters remain unchanged really on the chart. Looking at the 1-hour time frame, price action from today allows us still to consider the yellow wave count. What's yellow? Yellow wave count is the more bullish wave count I showed you already a few days ago. Or started to show you a few days ago, basically our breakout scenario in which certain targets should be reached to keep it alive and to keep it relevant. In this scenario, we are watching now for a third wave to finish somewhere above 61.2 cents. So 61.2 cent level, as per previous updates, is the ideal target, or the first ideal target for a third wave. The 1.236 extension, which is at 59.6 cents, is really the bare minimum. And we need to get there, you know, in order to accept this as a potential third wave. But I would trust this potential leading diagonal pattern in wave 1 to 5 in yellow. I would trust it more if the third wave would reach the 1.38 extension minimally, so the 61.2 cent level. However, that's not enough. We also need to see then a wave 4. Basically, I can give you a support area for this fourth wave once we've reached minimally the 1.236 extension, and then one more high in wave 5 would be ideal afterwards. Okay, and then if we get 5 waves to 64 cents plus, well, then we have a 5-wave pattern. What does that mean? Well, yeah, that means we have 5 waves, but it also means that we have the first confirmation that really this fourth wave bottomed there in January, around the 23rd of January. I will be able to give you a support zone for the upcoming pullback, and that would be a jump off point for the next rally to the upside. And it gives us basically an A, B, C structure. All of this is going to be made, or is being made more difficult by the fact that we're moving in this larger diagonal pattern here. Diagonals don't demand the development of 5-wave patterns. That's difficult. So we're not in an impulse. That's what I always say. Best is to trade what's clear. ADA chart is not so clear, doesn't need to give us 5 waves. If we get 5 waves, yeah, we have a confirmation, but it could also have bottomed and not show us 5 waves. That's what is so difficult in these diagonal patterns. Elliott wave just tells us, yeah, be a bit careful here, be on high alert, and it might take a little bit longer until we get confirmation here that a low has really been struck, which means trading diagonals is obviously always a little bit more difficult. That's why context, to understand the context, is so important. If we didn't have the context here and I was just seeing this, yeah, I could just tell you, okay, we need 5 waves. We don't necessarily need them, but I won't be able to confirm anything without really having those 5 waves. That's what it makes difficult, right? Anyway, I hope that's clear. Until we see the 5 waves, the risk is high that this is simply a high B wave, especially as long as we haven't even reached 61.2 cents. So this could still be a high B wave. A break above 61.2 cents would make the B wave scenario less likely because we would break above the previous X wave, but it wouldn't invalidate it. Okay, but what is the white count? In the white count, we could still see another dip into the yellow support zone, possibly targeting 44 cents next. And then ADA would simply have to attempt a breakout in wave 5 a little later. All right, but it wouldn't change the overall structure on the chart, and it would simply mean that the breakout to the upside is probably a bit delayed. Yeah, that's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.